Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try MarketGurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously. Create dozens of quick lists. Display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Good morning, everybody. Welcome to the Swing Trading Show. Today we're Tuesday, April 28, 2015. The question bar is open, folks. If ever you have any question, feel free to ask them. Markets today are tough. Really, markets where it's tough to read what's going to be the next direction. We know the FOMC minute is it's starting at around 2 o'clock today, I think. It's going to end tomorrow. So far, no statement has been issued yet concerning the FOMC. We also have the GDP reading that will be released tomorrow. Tomorrow is really important in terms of indicators that will be released, especially for the GDP in the US. The big news that we had today concerning the NASDAQ is that Apple has released their earnings. They did really great. The Apple, first of all, they will hike their dividend by 11%. They'll also announce a buyback program of $50 billion. So this is actually really good. And their liquidity has actually increased, and their sales have actually increased by 71% in China. So the NASDAQ so far, because of Apple's strong performance, is able to stay neutral. If we take a look at the situation here on the NASDAQ, where we are within this neutral range. Same thing too on the Dow Jones and also the TSX. So let's take a look at the sectors. First of all, the sectors that were weak and the sectors that kind of remain strong. We got a consumer staple sector at opening that remained weak, made an attempt to start the bearish cycle. Finally, we had a rebound. We had Metro that actually, well, can we consider this as a breakdown? Slight breakdown, though. I mostly consider it as mostly a correction towards this important support of $34. That's a stock that we still have in our analyst choice portfolio on MarketGurus.tv. Because of that important support, we're willing to tolerate it. Loblaw, starting a breakdown as well, could head towards $61. So it's only an opportunity to signal that it's a breakdown. You can get it at a cheaper price if it stabilized at $61 for Loblaw. George Weston also broke down and finally got back up. So seems like with the markets that are not so sure of which directions to go, definitely investors are continuing to rush into consumer staple stocks. Empire also starting a breakdown. On that stock is clearer though. It's pursuing its bearish cycle with more downward momentum. As Empire, we could actually have a pause toward 86, which also corresponds to this important upward trend on Empire. So it's not a nice short. We also have Alimentation Couche-Tard, which is in our analyst choice portfolio on MarketGurus.tv. it's still a hold because Alimentation Couche-Tard remains within its neutral formation. If we continue with other stocks, the industrial sector, it's a sector that is still weak. We have CSCP, which is having a correction towards its support. We have CNR, which is pursuing its bearish momentum. Now it's tough to find a bottom in CNR. Is this a point where we have a bottom? So far, the bottom could be confirmed if we could have the stochastics, 93 stochastics around the 30% range. It's not the case so far for CNR. So it's tough to say at this point if it's a bottom for that stock. Air Canada could sort of break down in the industrial sector. So far, it's just testing its support. And Toromont also is staying weak. So industrial stocks remain weak on the Canadian side. The gold sector is a sector that is pursuing slightly its rebound. So far, the sector is unable to start any clear bullish cycle. Barrick Gold released their earnings today. Barrick Gold did really great, right? And so far, Barrick Gold is continuing its rally that started yesterday. We put it in a breakout on MarketGurus.tv. And if we take a look at this here, though, there are other stocks on the gold sector that could break out. We already have Nova Gold, that is a buy today. It's clearly breaking out. Torex Gold, that is also a buy today. China Gold, that could be a buy. Rubicon Minerals, that could be a buy higher than 143. Agnico Eagle, that could be a buy higher than 38.41. So there's a lot of gold stocks that remain within an interesting neutral situation. The ones that are breaking out are mostly the small caps, such as Nova Gold, Torex Gold, that are breaking out. So those are the leaders today. However, I think that as long as you do not have a clear cycle on the gold sector, it's not worth to be in a buying spree on the sector. So good for those of you who are opening some bullish ETF. We're continuing to build up your positions. If you have already opened some bullish ETF on the gold sector 1, 2, or 3 days ago, hold on to them. Do not over increase your exposure because we need to see a confirmation of a bullish cycle on the gold sector. Can we have that? Well, let's try to put, for instance, here the an indicator that could give us that volume unbalance. So what we're going to see if within this sideways formation, do we have an increase in volume? So we're going to take a look at this in the next segment. So the volume unbalance is an indicator that allows us to see when a stock or when a sector is within a neutral formation, do we have an increase in volume that could allow us to feel confident to buy that stock within the sideways formation. And if ever we have a confirmation of a breakout, the break of that resistance, then that will be a clear bullish signal. So on the gold sector, we see that the volume imbalance is showing us that even if we're staying within the sideways formation, volumes have been increasing, which is something that's positive. However, as I said, it's only a way to build up your long positions. The volume imbalance is confirming us that yes, there's a lot of volume within the sideways formation, so we could have the signal of a bullish cycle in the gold sector. But right now, I think that as long as we don't have the major caps, the big caps such as Agnico Eagle, Goldcorp on the TSX that is starting a breakout, we cannot say that we can believe in a movement like that on the gold sector. So okay to build up your long positions on those stocks. For instance, here on Goldcorp, you see that we're still neutral, but volume imbalance is showing us an increase there on Goldcorp. So you could build up your position on that stock and put your exit point at 22.87 on Goldcorp. So that's a strategy on the gold sector so far. Concerning the energy though, it's at risk. It's a sector where we're considering on MarketGurus.tv to potentially close our long positions on the bullish ETF that we have recommended for the last few days, which is HEU. So because the energy sector right now is in a position where we are testing the 30, 50-day moving average, if we take a look at this here. So we're testing this moving average here. We're going to remain slightly patient, but on a new low intraday though, we're definitely going to have to close our positions on HEU, which is the bullish ETF on the energy sector. We have a slight intraday rebound, but if ever during the day we continue to go down, we will have no choice but to close out positions on HEU. And this is that we just want to avoid to have to tolerate a loss until the 50-day moving average around 226 points, because we will lose all the gains that we have made since the rally on the energy sector. And this is not what we want in our analyst choice portfolio. So be ready to be in a mode to close your long positions on the energy sector if ever we have a confirmation of a bearish cycle and if the sector goes below 232. We do have some stocks that we have in our analyst search portfolio that are escaping this wave of sellers. Berkliff Energy was recommended on Market Gurus TV on April 23rd. It's still a stock that maintains itself within this sideways formation, so there's no need to close Berkliff Energy for the moment. It's not a position that's at risk as long as it remains above 771, which is the support on Berkliff Energy, and it also corresponds to this upward trend on Berkliff Energy. Tourmaline is at risk. That could be a position that you could reduce, especially for those of you who bought the positions here or there. If you go below $40.86, $41, $40.86, $40.85, we have this energy sector in a bullish cycle. That's a stock that you're going to have to reduce. So that's the strategy on the energy sector. Be ready to reduce. On the gold sector, you could actually favor stocks where the volume and balance is showing us an increase. So that's the way you could build up your positions on the gold stocks. We do not have a bullish cycle yet, so which means that if you already have opened some positions in the gold sector 2, 3, 4 days ago, do not over increase your exposure on that sector. But if you have no exposure at all and you would like to trade the sector, I think building your position slightly is also a strategy that you could favor on the sector. Now let's take some questions from Al. Al had questions here on MBC. What do you think? MBC is a stock that's pursuing its upward trend. Why do I think on a stock like that? Well, the stock has the probability of potentially pursuing its rally, except that today it's having a correction. I don't like the volumes there on a stock like that, because for day trading it's not so interesting for MBC, MBIC. The thing is that stochastics is good, but volumes are not that great for today. So for a stock like that, what do I think? I don't know. Getting in today would not be the most appropriate strategy on a stock like MBAC Fertilizer, but because I don't like the liquidity on a stock like that, and I prefer to get in into a stock like that when it's a first movement. So now we had the breakout here. Now it's mostly a third day movement where we're stabilizing. So I don't think it's appropriate timing to get into a stock like that. I think it's better to wait for stabilization phase and a new breakout on MBC before considering to get into a stock like that.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above.
So Nancy has a question here. Hi Chris, is it time to buy CSE on the TSX? Well, CSE, Nancy, it's not a time to buy it now. However, I have to congratulate you because you found a stock that definitely fits the criteria to be put on your watch list. Why? Because look, we're testing this downward trend there on CSE. We have already made the rally that bring us through this downward trend. The fact that we're stabilizing, it's a good thing. Now, let's take a look at this. Do we have an increase in volume in the volume unbalance? Slightly, but not enough to be considered that it's a go on CSE. For the stochastics, overbought, so which means that it's a no-go. There's still some room to go for the wave of sellers to be persistent on a stock like that. And the good thing is that the 10 days above the 30-day moving average. So overall, these are the positive points. 10-day above the 30-day moving average, positive. Other positive points, we have already made the rally to reach this downward trend and we're stabilizing. Another positive point, because we're forming the sideways formation, and if ever we have a wave of buyers, that will be a nice buying signal. Negative points is, first of all, volume imbalance is not as great, not showing us enough volume to buy that stock within this sideways formation, and overbought stochastics, which gives us the risk that CSC could go down further because we overbought and the wave of sellers is still there. That could bring the stock lower down. So for those reasons, unless CSC stabilize more and breaks 375, which will confirm the reversal of this downward trend, I will not get in. But it's a stock that should be put on your watch list. Good call there, but not a buy today. Now, Tom has a question that BKX, is it a go? It's not a go. It's a stock that's neutral. There's still that resistance there, Tom. Look at this, because this is a resistance because every time we tested that point, we went down. So around 63 cents here, several times we tested it, we're unable to break it. So just like CSE, it's a stock that's worth to be watched. However, it's going to be tough to break that resistance of 63 cents. I'd like to see the stock break it out, but it's so far it's tough though. We do have a stochastic that's positive, showing a higher bottom, which is a good thing. 10 above the 30-day moving average, which is also a good thing. However, histogram is not yet in positive territory, so it's tough for us for that stock to break 63 cents. For me, that's the point that it needs to break to confirm that it's a go. Until it stays between 50 cents and 63 cents, it's not a stock that I will buy at all, because there's still a risk that we might stay there within the sideways formation for a while. And while we stay within the sideways formation, you just lose money, right? Or the stock doesn't do much. Wait for a more explosive signal higher than the break of that resistance at 63 cents. Now, Andre TH, a buy between 110 and 115. Okay, so you want to buy the stock at the bottom, right? Would it be a buy? You're doing a different type of trade, Andre. You're buying within this, using the moving average as a support and a resistance. The thing is, if you're buying at 110, 115, where are you going to put your stop loss? The risk I see with that stock is, first of all, I see a clear bearish divergence, which could bring the stock lower. We have a stochastic that has some room to go before it reaches the oversold situation. Why a bearish divergence? Because look at this. That top, the stochastics was here. That top, the stochastics was here. And on that top, the stochastics was here. So we went higher on that stock while the stochastics was making a negative top. So that's a clear bearish signal. So this is why we have this wave of sellers that's persistent. It's in the healthcare sector, a sector that took a big hit yesterday because the healthcare sector rallied for the last few weeks on the NASDAQ and also on the TSX as well, because there has been a lot of wave of mergers and acquisitions. Yesterday, Malin Labs said that they don't want to be acquired by Teva Pharmaceuticals. So this created some cold shower on the sector. We had a lot of investors that sold their healthcare stocks. So for me, buying a stock and only using the 10-day and 50-day moving average as a signal to buy it, I think it's not enough. You have a MACD histogram that is showing us that there's still some selling pressure. You have a stochastics here that's confirming a bearish divergence, and that could go further down. So for me, unless TH Technology could stabilize clearly around 115, stay there for 2, 3, 4 days, have a stochastic that can stabilize at least and start to get towards the overbought situation, I think this is actually a clearer signal on a stock like Tera Technology to confirm that, okay, at this point, the stock stabilized enough, so it's a buy. So for me, you have to be a little bit more patient in Tera Technology and not rush the move to get it into a stock like that, because the indicators are not so positive. I'm talking of the MACD, the stochastics on a stock like that. Now, as for the best, those are actually the list of the best breakouts that we have found. A lot of stocks, of course, in the gold and silver sector, they have been really active today. So those are the best picks. SSO, NG on the TSX, one of the best buy on the gold sector. And as for the day trade of the day, it's a stock in the copper sector. It's Freeport-McMoRan. As I said, it's a tough market. Usually I know we find stocks that are more explosive than that, but that has been the best pick that we have found on MarketGurus.tv for today. Really, we had a lot of false signals for day trading. That stock gave one entry point here on the break of that sideways formation. Another one slightly here. Now it's totally neutral. So the next entry point is going to be around 2270 on a stock like Freeport-McMoRan. The good thing is that Freeport slightly above its 100-day moving average. The stock could continue towards 23.33. So if ever it doesn't do it today, it might do it tomorrow to reach 23.33, which is that former resistance for Freeport McMoRan. So that's actually the stock of the day for day trading. So overall, folks, be in a mode to potentially close your positions in the energy sector because it's a sector that could start a bearish cycle. We're going to act on MarketGurus.tv. We're going to close HEU, which is the bullish ETF on the energy sector, if the sector starts a bearish cycle. Gold stocks remain interesting. A lot of them could break out. We already have some breakout. Nova Gold Resources is already one of the best breakout in the sector, and there could be additional ones. However, the sector is not yet starting a bullish cycle. We have the FOMC announcement that starts today. That will end tomorrow. The GDP reading in the US. So those are all some economic indicators that could give us a clearer signal on gold. So far, it's tough to say what's going to be the new direction on the gold sector. And this is why I think that if you're building up your positions today, that's only if you have no long exposure at all. If you already have long exposure, hold on to them. Do not over increase your exposure on that sector yet. So that's it, folks. See you tomorrow at 12:30 on the Swing Trading Show on DecisionPlus.com.